Okay, let's go ahead and get into the stock market technical analysis. We're going to go ahead and look at the broad markets, some individual trade ideas, and then we'll go ahead and wrap up. So starting off today, guys, triple Qs. We have, obviously the market's continuing to sell down. The last sell signal, the most objective area to short, and I did point it out to the private member group, was right there. Okay, that was an objective area. You had resistance, 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 and resistance. Remember, you want to short into resistance. You want to cover shorts into support. So keep that in mind. A lot of people that probably weren't shorting here, go back and look at the day, October 12th-ish. Go and look at my comments and you'll see it. Most people will be talking about the market's going to new highs, bullish, all that. That's just the nature of shorting, especially. You're always going to have most people bullish, perma bulls. Most people are going to, 401ks for the most part are only long funds, and so that is that. Now we've seen a pretty good drop. From that top there, we've fallen about 8.3% on the tech stocks. Looking at where we're at now. We did just break the recent support. There it is, support. This is the support that's held for a while. They tried to hold it, had a little rally there, but the last 2 days really intensive selling. So that's now resistance, guys. It's sell the rip, and resistance is right there, 354.75-ish. All right. So if you rally to there, that's objective to short. Support is just below. We've got some support. I've got a couple trend lines. One, the 200-day simple moving average is down here at about 338.85. We have another little level of horizontal support about 336.61. And then also we have this potential downtrend line off of the pretty much the all-time highs there. You can see one reaction, two, and maybe a tag of that would be support. So I'm seeing kind of a confluence of support just below now. There's not too much more downside, although there could be some downside. There's not a whole lot more before you hit potentially major support. So by no means is it objective to short anymore. Definitely not where we're at right here. I'm kind of expecting we're going to bounce probably pretty soon. The risk reward, I mean, if we sell down to the 200-day, that's about 1.5% to the downside. And then the bounce back to resistance from where we're at is a 3%. So it's about a 2-to-1 risk reward ratio, meaning that there's more potential for a rally, more reward to the upside than there is to the downside before you hit support. Okay, so that is really all I see. Now, if we take out the 200-day SMA, then maybe things will change. We do have Amazon earnings coming out, so we'll take a look at that. Amazon on the daily chart. Potential support trend line. You're coming off the lows here on this daily chart. Support, and we are pretty much right there at that key level of support. You do have the 200-day just below and that trend line, and we have earnings after the bell, so could gap down for sure, but there's no indication that it's just gambling to bet it's going to gap down. So we really just need to wait for earnings to clear. It is at support right now. The market's pretty oversold. I don't know. If I had to lean one way, I think we bounce, but it's definitely a higher risk to take a position just ahead of earnings. But there it is, Amazon on the hourly, sitting right there at support. Okay, moving on. We'll look at Google. This has obviously been a trade idea, individual trade idea on the channel. This one, it was pretty clean and well forecasted. Negative divergence on the momentum. All right, momentum on the daily chart's been dropping for a while. Bearish rising wedge. Okay, sell signal came right there. All right, on the break of the wedge. That's your sell signal. All right, then they did a back test. Objective short to backtest into resistance right there. That was pointed out in the private member group. Guys, if you're new and you haven't joined up on the private member group, that's where I'm putting out a lot of my active trading ideas, and all the trading ideas that ever come out on the channel have been in the private member group first, and some I'm not bringing out on the videos. So if you're interested, join up, link in the description below. But that was your objective short right there. If you took that short, if you took the breakdown, you're profitable by, let's say, roughly 7 to 8%. And if you took the back test here, then you're profitable by about, what, 13%. Okay, so profitable trade there, back test, and a big sell signal on earnings. However, Google's now at support. All right, you've got some support right here. You can see this gap up right there. Boom, we filled that gap, undercut it. We're at support. I'm thinking there's going to be a bounce right here. I would expect there to be a bounce. The 200-day, if we don't bounce, then we could go down to this next level of support, which is about 116.22, and then you'll hit the 200-day moving average as well. So that would be good support as well. So those are the key levels. Otherwise, if we bounce, resistance about 127. All right, that's former support. That should be resistance. All right, it was support through here, support through here. That should be resistance. So 127-ish is the next objective level to short at. Moving on, MasterCard. All right. Actually, I forgot to go in. Let me go to Apple. Apple, boom, daily chart below the 200-day moving average. Now, earnings is next week, so a breakdown like this, right below the 200-day, just ahead of earnings, is a little suspicious, but it is below the 200-day. So we'll see how the FANGs and how Amazon comes out after the bell. But this is below the 200, so that's, as of right now, a bearish look. However, Apple, one thing to know on Apple on the daily chart, you do have some bullish divergence right there, all right? You just made a divergent low. All right, that's a divergent low. You did rally. We're coming down that's another divergent low as of right now. So this is actually a little bit more of a bullish chart, and if they can recover the 200-day moving average, you could see a decent sized rally in Apple, probably at least minimum 181.34. So I'm not extremely bearish on Apple right now. Yes, you took out the 200-day, but it's got bullish divergence. It's just ahead of earnings. It doesn't look, it's not an objective short here and now. And then Meta had earnings, big smackdown after earnings. Support is right around in here. It's not the cleanest support, but it's basically these reaction lows. Looks like they stepped in a little bit early, but that's a relatively decent support as of right now. So you take that out, then yeah, you should go down. There's a gap to fill right here. So you've got the 200-day, and then this gap to fill would be the next levels to watch on Meta. And Nvidia is basically, look, support, and we're right there at support. It's basically 404-ish. You break that, you're probably going to head down to about 374.50. That's kind of the area where Nvidia gapped up to on the AI hype. So gapped up there, and that's likely the next level of support. And then also you have an uptrend line to watch here. All right, support, and that would be right in there. And then the 200-day. So lots of support underneath for Nvidia. It's got a lot of work to do. To be longer-term bearish on Nvidia, you got to take out these big support levels. I think we're going to head down to those levels, and I do think those will get taken out. But you're very, I don't want to short into such major support. I want to take those out before I start to look to short this one. Okay, MasterCard. MasterCard's been an active short on the channel. You've got negative divergence that has been building, big bearish rising wedge. The measured target's the widest part of the wedge. So that still is setting this up for a move down to the measured target, which is about 340.50. All right, we also have some support right in here, about 369.34. That's been taken out as of right now. We'll see if the buyers step in to close out the day. And if they do, you're probably going to bounce up and fill the gap. Okay, gap fill, and the 200-day is now resistance. That's the objective area to short at. All right, it's not objective to short here. So if you rally up into resistance, objective to short, and then you get the next leg lower all the way down to the measured target about 340.30. So that's kind of what I'm favoring on that one. But so far, it's been a decent drop. Again, the big sell signal came right there. I have it circled there. So again, when I point out these trade ideas, oftentimes I'll point out a trade setup, and I'll talk about that trade setup as long as it remains, even though there's no trigger to enter the trade. And then when they trigger, they take time. You don't just get a crash. But I get a lot of perma bulls that sit there on little rallies like that saying, oh, you're wrong. Yeah, in the very short 3 or 4 days, I'm wrong. But in the longer term, the trend that I'm trying to capture is down. So, days like today, they all realize they're wrong. But again, if you're trying to short on days like today where all the bulls realize they're wrong, you can't make any money shorting after everyone realizes they're wrong. All right, you have to basically be early before it's completely obvious to all. So that's the nature of the game. EMR, this is one I talked about for a while. It's at good support. Look at that. Support, resistance, 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 support. And we're right there, just below the 200, but that's good support. So if you're still in that, I think it's time to probably lock in profit personally. All right, DraftKings. DraftKings, again, we had a bearish rising wedge here. Widest part of the wedge right there means that, and I think this is the widest part of the wedge, could be this part right here, but that sets us up for a move down, somewhere down around here, 1725. So I still think there's some more downside here. But again, DraftKings is going to go where the big cap tech stocks go for the most part. So you see a rally in the fangs, you're probably going to see a rally here. It also then set up an isometrical triangle right here, which is in a decision pattern. Broke to the downside, brief little recovery followed by a hard failure. So that, to me, dictates this is heading lower. So sell the rip. That's it. Support right now is the reaction low, which is right there, 25.28, and then the 200-day simple moving average just below. So I think this will probably continue lower. Yeah, that's what I have on that one. GE. So this one had earnings recently. We're still kind of range bound. I've got this range right here. Support's right around 106.80. It broke that support just ahead of earnings, and it was actually a divergent low. You can see here on the RSI, divergent low there. Not so much on the PPO. Earnings came out. They popped it back above. I still held strong because, again, I'm looking for this to be a major breakdown and a continued move down. And then again, you can see they sold it down. We're still range bound at this. I did cover my short on this one right when we hit that support again today. Again, we were pretty hard selling the last 2 days, and we came into that support right there, and I covered the short because at the end of the day, covering right there at support, if we continue lower, I can reshort it, and that's a break or a sell signal. But again, why not just cover at support and then let it break that support before reshorting it? So that was my mentality on that one. So far, it's been the right move. And I still think this is going lower, though. You can see big negative divergence on the daily chart. It's been building for a long time. So still, at the end of the day, I would just say we take out the most recent lows, give it the benefit of the doubt, and just go like that. Bump, move it down. Take out those most recent lows, about 105.50. And that's your next sell signal on that. And that should set this up for a tradable trend to the downside. Finally, UPS. This has been another trade idea. Again, we have, if I roll back on the daily chart, you can see this is a thin zone right here where basically hardly any trades took place. So that's really, when you re-enter a thin zone, you're typically going to just move right to the bottom of that. You have some support though right here. All right, look, reaction high, that's resistance, and then it gapped up right to that level right there. So two very defined reactions, and that level is about 135.11. All right, so if I zoom into where we're at today, we traded down to about 138.86, and that's the major support. So there's not too much more downside before you hit that good support. It's a very obvious level as well. So I'm kind of leaning towards we actually don't hit that before seeing a little rally. I think we rally first like that and then roll over and hit it. All right, and then maybe even go right through it and fill the gap. All right, so the next level is a support, 135.50, and then this gap fill that's good support, about 125-ish. All right, 124.80, somewhere right in there. Don't wait for the exact penny, but that's strong support. So that's what I'm leaning toward. I'm leaning towards we rally, come down, hit that, and then run down and get close to entering the gap, if not fully filling that gap. And that would be the end of this trade idea if you see that. I'd probably be moving on from that trade. Okay, wheat. Wheat still looks like a long, guys. Again, I'm going to continue to talk about the trade setup until it either fails and the technicals change, or it works out. But by the time it works out, it will no longer be objective. So, wheat again, bullish divergence. Momentum has been building for a while. So you've got momentum is building. Meanwhile, you've got this bearish or bullish falling wedge. Breakout, backtest again, backtest again. All right, so you've had 4 backtests of that, and we're just still holding this support. We've really been trading in the same area all the way, for almost a couple months now, two months or so. So there's nothing that's really technically changed for the last 2 months. Still looks like a bullish setup. We need to take out, it's about $6. All right, you take out $6 on this wheat ETN, and you're likely going to have a pretty quick move right up to the 200-day moving average. I don't see much in the way of a stop. Maybe one brief reaction right here. I can see a little level right in there at about 630. So I think you probably spike right to 630, flag out, pop up to the 200. Okay, and then probably continue higher. All right, big resistance right here at 741. You take that out, should be a clean shot up to about 950. All right, so there's a lot of potential upside on this one. It just hasn't worked out yet. It's not really going down. We're just kind of hanging out, building a base. So we'll stick with it. And then natural gas is still looking kind of interesting, like UNG. This one, same kind of look. You've got bullish divergence, and you have this big basing pattern, this big kind of bottoming pattern here. The buyers keep stepping in at the lows. So I think, next up, the 200 days right up here. So we take that out, you're probably going to see natural gas start to spike up. So we'll keep an eye on that. I do like both natural gas and wheat as, as long setups. Okay, I'm going to go ahead and wrap up, guys. If you're interested in taking the stock market technical analysis course, I am going to probably take that down from the site. I'm not, there's not a whole lot of interest in it, and that's fine. So I'll probably take that down here in the next month or so. So if you're interested in taking that, check it out. It's a day, it's not a day trading course. It's not teaching you about how to get in and get out really quick. It's teaching you about technicals, what the charts can tell you about future setups and trade patterns. So technical analysis course, link in the description below, and then obviously the private member group. Okay, I'll catch you guys on the next one. Bye.